Hey there. We are live. We are almost finished with basically the nation's second week of self quarantine. For a lot of people, it's the third week, some people, even the fourth week. But I think most of us, the third week. A couple of states finally started this week. Are you keeping your cool in these times? It's really important because, I tell you, I'm only human. And sometimes, I get a little snippy with the other people in my house. Again, I'm human and, I've got the kids and all that. And you have to just make sure that you realize that everybody is a little stressed, having the same stuff to deal with. The kids are out of school. It's a very different routine. It's a very, the kids are so off schedule. Their routine is off schedule. It's an emotional thing. The kids don't see their friends. And, it's not just tough on the adults. It's tough on the kids too. And I think you know that. So if I'm preaching to the choir, I apologize. But welcome to another edition of Be the Boss of Your Money. We've got a couple of things to go through here. I want to give you a quick market update. You can make up your own mind if you think this little rally really means anything. I have my answer, and I'll show you exactly what I'm talking about. When you look at the top percentage movers in the market, you'll realize that I'll show you why the market went up, because in light of the 6.6 million first-time unemployment claims, this boggles the mind. I mean, 6.6 million people lost their jobs and filed for unemployment claims, on top of the 3.3 million last week. So 10 million people in 2 weeks. Holy, you know what? Okay. A couple of things, classification of stocks that I like to call. I was on a webinar last night, a Zoom call last night. And I used I called it screens and staples. And then I want to talk about gratitude. There's something that I did that I'm very grateful for, and I'm hoping that you will tell me what you did that you're grateful for in the comments below. Ask questions. That's what I love about this. I will be checking my LinkedIn, my Facebook. I'm here every day. I think I'm coming out with good stuff, and I want to make sure I give you value. The best way for me to bring value to you is if you actually ask me questions, talk about things, and that you want me to address. I can talk about 529 plans. We can talk about all kinds of the stock market. We could talk about the business environment. We could talk about networking. There's a lot of things that we could talk about. We can talk about investing in tech stocks. We could talk about budgeting. There's so many things to talk about. When I first started doing this, my concern was after a week or so, what the heck am I going to talk about? But the stock market is giving us so much to talk about with its wild, crazy swings that I think it's unfortunate that I'm not running out of things to talk about. I'd love to be able to say, hey, I got nothing. It was just a kind of a flat day after a flat week, after a flat month. Nothing's going on, and we'll just call it a day. But that's not the case. There's something going on. There's a lot going on. And we have to also talk about this. If you're over 50, over 60, how has this changed your retirement plan? Did it change your retirement plan? Did you move money to stock, out of stocks toward something more stable? Look, we'll get into it. So first, I want to welcome, hey, Bill. Bill, it was great to see you last night on a Zoom conference call. And thank you, my friend, for tuning in. That is a very special thing. It means a lot to me. Now we're going to roll the intro. That song is just so appropriate. Hey, Cindy, nice of you to join us. Thank you very much. And yes, I am live on LinkedIn. I guess you're asking me that, but yeah, I'm here. So, stick around. It's going to be a good show. We're going to talk sports. No, I'm not. I'm just kidding. I'm not really that much of a sports. I wish I was, because then it would give me more stuff to talk about. But I'm not looking to fill space. So let's just take a quick look at the market, and I want to show you something. And you tell me. I'm going to share a screen, and you tell me what you think. Okay, I'll tell you what I think. Share the screen. This is why the market went up today. If you look at the top gainers today in the S&P 500, which is an index that you cannot invest directly into it. You can't invest directly into an index, but you could invest in a security that tracks or mimics an index. Just have to get that disclaimer out of the way, okay? So here are the top gainers. And if you look, Occidental Petroleum, Apache, Diamondback Energy, Helmerich and Payne, Devon Energy. Okay, this I don't know, Tech, whatever, blah, blah, blah. Conoco, Halliburton, One Oak, Contra, Marathon, Chevron. Okay, so out of the 12, 11 of these are energy. So the whole thing is built on energy. I mean, yeah, look, energy is the most beaten up part of the stock market. Okay, it's the worst performing sector. The XLE, okay, is the ETF that tracks energy stocks. I'm not getting sick. Every year this time of year, I get some allergies. I get a little drippy. The air is kind of cool, and it's just a really nasty time for me. I always get this drip thing. I can't stand it. So anyway, it's all energy, and it's based on news and a follow-up tweet that President Trump, he spoke with Vladimir Putin and MBS of Saudi Arabia. So, and somehow they've decided, because they, love America so much, that they'll cut production by 10 to 15 million barrels per day. Okay, well, that's why the market went up. That's what it was. I mean, and that's what countered 6.6 million job losses. To me, it's a weird reason. I mean, just because one sector went up, oil went up like 25% today. I think one of the biggest rallies in history of the energy markets. That's why. So you have to decide if you can trust this rally or not. My thing is, it doesn't matter. I'm going to be doing the same thing over and over for the long term, making sure as clients get older, their goals are a little closer. They need to take some risk off the table. It's really more of a matter of how close your goals are, age, risk tolerance. All of these things come into play. It's not a matter of, well, I'm going to get out of the market and get in the market. It's not about the market timing aspect, because I really haven't met anyone who does that well. So if you take a look at the overall Dow, and this strikes me a little bit, is that the major averages, like, we track the Dow, because that's the major index that everybody talks about. Okay, some good news there on Tesla. So the Dow is up 469 points, but that was 2.24%. I mean, it just seemed like recently that a 2% or more move in the Dow was just so significant. But at this point, 469, 470 points, we'll round it up 500. This is weird how like a 500-point swing is almost tame, but that's what we have to get used to. Okay, so we have to keep. Yeah, you have me in the full screen again. You have to keep everything in perspective. We're not just going to trade at the outer limits of past volatility. It used to be if we had job losses of 100 or 200,000 or 300,000, it was a big deal. 400,000 was a big deal. But when you get in the millions and close to 7 million, today 6.6 million, you have to get used to these, not just swings in volatility, but completely new boundaries are being set in terms of what really is possible in the world. And you have to think big, but you can't let the highs and lows get to you. If we had 1,000-point up day or 1,000-point down day, like yesterday was a tough day, you can't let these swings get the best of you, and you can't get excited or nervous. Oh, I feel relief. The Dow is up 469 points. I feel lousy. The Dow is down 500 points. You have to really just get used to it and deal with it, that these big swings, and not just in the major averages, but in everything, economic statistics as well. What I said yesterday is I have in a Zoom call, I said I have good news for you and bad news for you. The good news is the economy and stock market will recover after things get much, much worse. The bad news is things will get much, much worse before we recover. So with the expectation of hundreds of thousands of deaths from coronavirus in the United States, over 1 million people worldwide are officially COVID-19 positive, according to the Johns Hopkins University Coronavirus Resource Center. That's that map I keep showing you. The United States is almost completely covered in red now. All right. So is Western Europe. So that's the biggest statistic. So that's what's leading this, and we'll see how it goes. It's odd that the last time we had a decent rally was after some really bad news as well last week, and it's the same thing. Last Friday after the Thursday was it? Those horrible employment figures last week, and the market went up, and it's the same thing this week. I'm going to get out of the racket of calling bottoms in the market. I can give you so many reasons why we've seen a bottom, and I can give you so many reasons why we didn't. And I think we have to stop worrying about bottom. If your definition of a good investment is a stock that doesn't go down, or any investment that doesn't go down, or if your idea of a good investment, for example, is, if I ask you what's a good investment, you might say one that goes up. I think that's a very rookie way to look at it. I'm not trying to insult you. Hopefully you're not insulted. It's a rookie way to look at it. Okay. An investment is something that fits in with your other investments. A good investment should fit in with your other investments. That's what makes it a good investment. It doesn't necessarily go up all the time. It doesn't necessarily go down all the time. It's going to have ups and downs with an expectation that over the long term, it'll work its way higher. And this is why we invest in, our homes, small cap stocks, mid cap, large cap, international. This is why we have diversification, because over time, we expect everything to work if given enough time. But in the short run, different investments go up and down at different times, and that helps smooth out volatility. And there's always the possibility that one of your investments could completely disappear and go to zero, which is another reason why diversification works. So diversification is a strategy that we use to mitigate risk, but it won't keep your portfolio from going down in a generally down market, as you can see right now. So the other thing is this: a category of stocks that I like to use is, and people have been asking me what I like, and I've been saying, consumer staples, companies that make things that you need. Like consumer discretionary, that's like a Harley Davidson motorcycle, Tiffany, jewelry. These are not things that you need. They might be things that you want really badly to become a need for you, so you could get your dopamine hit. But they're not, these are discretionary. Consumer staples is typically described as toothpaste and toilet paper. And then there are screen stocks, companies that keep you glued to your screen, companies that they give you something to do. I mean, nothing else to do right now to stare at your screens, right? I mean, obviously, I'm lucky. I have work to do. I'm very busy. The stock market didn't close, so my business didn't close. I'm moving along. I'm grateful for that. But a lot of people have slowed down, or there's not much for them to do except for worry and pace across their living room back and forth. So I feel bad for those people, and it's a really tough situation. So screen stocks are what keep you occupied. We're not going to stop Facebooking. We're not going to stop YouTubing. We're not going to stop. We're not going to stop Netflix and chill. Hopefully, right? Okay. Is that appropriate to say? Is that okay? Okay. Hey, Joanna's in the house. Thank you so much, Joanna. I really appreciate you. I appreciate you being here. You're saying, Joanna's saying in a Facebook comment, thank you for doing these. Thank you for watching. I mean, I take a lot of encouragement from something like that. Thank you for watching. It's my pleasure. And I'm just full of gratitude for that. Thank you. So what's next? Gratitude. That's, if you see in the bottom of the screen, there's a little ticker going by. See this? rebound, stocks, gratitude. Then it starts rebound, stocks, gratitude. I led a call. It was one of the fun things I did today, a Zoom call with some people who I do a lot of business networking with. And we're talking about how we're all managing through this time. And, you know, one is a partner at one of the biggest law firms on Long Island. It would be a big law firm anywhere in the world, but he happens to be, near me, doesn't live far from me. And he's a really good guy. And another friend owns a really big HR and payroll company. And another person is a top person at a not-for-profit. And we're all talking about, what are we doing to get through this? And the person at the not-for-profit, it's the Long Island Alzheimer's and Dementia Center. And, they can't have their patients, come in, because what they do is they have programs that keep cognitively impaired people, adults, entertained. People have dementia, Alzheimer's, things like that, cognitive impairments, so that their caregivers, generally speaking, their family members, can have a break and let them go to a place where they can be taken care of, fed, and made happy. And they're closed now, and it's like heartbreaking that these people are getting special care and they're out of their routine. So what they're doing is they're actually doing a lot of video conference stuff and trying to keep people engaged with the caretakers and things like that. The attorney seems to be very busy, still has a lot of litigation going on. The state courts are closed. They are in New York anyway, but the federal courts are open and judges are still being aggressive and moving things forward. So some things are moving forward. And the payroll person, he's just like a very talented business person, and he could also be a really good coach. He does actually coach a lot of people. That's his official thing. And he's talking about the things he's doing and how he had to help his company. He didn't want to lay anybody off, and he has a lot of employees, so he did an across the board pay cut as opposed to just having layoffs. And his feedback from his employees was very positive. And this is somebody who ingratiates himself with his employees. They're like family to him. So that was really cool. And if you're watching this and you know me, you probably know who these people are. Let's see if anybody's out there in LinkedIn land. There are a few people watching. Thank you, all of you who are watching. If you have any questions, please, please hit me up. If you have a question, hit me up with it. If there's something you want me to cover, let me know, because the validity of this show, and I am officially calling this a show because I've been doing it long enough now. I want to call it a show, and I enjoy this, and I look forward to doing this all day. But the validity is all based on if you're getting value out of it. So when you have a question or a comment, or or something that you want me to comment about, ask away in the comments, because I want this to be really user friendly, really helpful. Okay. So the gratitude is this. Boy, I'm off track here. So I talked to this group today on Zoom about what we're doing, and I since I moderated it, one of the things I asked, "Hey Jennifer, good to see you. I see Jennifer is in the house, and hi to Mike, by the way, and hello to the cats. Love your cats. It's good to be friends with you on Facebook, and I miss your Long Island Railroad rants. I guess if I have to say, like, the worst thing about this whole thing is that I don't get to hear about your travel stories in the Long Island Railroad. But what I said is, what I asked everybody is, what have you done that you didn't even realize would help you through this time? But something you did that now you're looking back and you're thanking your lucky stars that you did it. Some people, I bought a really good computer a month ago. I had no idea how much I was going to be using it at home. Some people are saying, I'm glad I learned how to use DocuSign, because my whole life is running on DocuSign. And some people are saying, hey. And some people are saying, hey, Amy, how are you? Amy is in the house. Amy from ACLD. Thank you so much. My friend Amy is here. So, what have you done that you're so grateful that you did without even knowing that no one knew that we're coming into this disaster? Listen, the coronavirus started in China, as you know. The Wuhan virus was originally called, okay? And I saw a T-shirt online being sold. It said "Straight out of Wuhan." Did you guys see that? I mean, I didn't know if I should laugh or shake my head, but you do what you want. Straight out of Wuhan. I guess they chuckled. Okay. So We started as a massive supply chain worry that China was not going to be able to manufacture things like tires, cell phones, computers, furniture, whatever you can imagine that we get from China, which is like everything, clothing. And we went from worried about a supply chain disruption to a total destruction of demand. There's no demand for anything except for food. And that we have a lot of demand for, and we are just eating like I'm going to be a marshmallow by the time this quarantine is lifted. So hey, you don't miss the Long Island Railroad, Jen. Yeah, you know what? I didn't think you did, but your sarcasm is always appreciated. Hey, Lori. Speaking of sarcasm, my friend Lori is in the house. Hey, Lori, good to see you. Thank you so much for joining me. So one thing I am really grateful for that I did, and I didn't realize that we would be in this situation. Nobody did. I mean, we knew we could have bear markets and recessions, but this quarantine, the 6.6 million people first time unemployment claims. I'm really grateful that I started creating content a long time ago, and I'm especially grateful that I started doing live streams before we got into this mess. Because if I had to learn about the technology, the ins and outs, the which webcams to get, the lighting, just to use the technology. If I had to learn how to do all of this stuff, to get comfortable speaking to you while I'm live, you have to get comfortable thinking, what if people don't like what I have to say? Or what if I stumble over my words? This is live while I'm doing this. It's not going to get the rewind and, hit the edit button. But I am especially grateful that we're grateful for a lot of things, for our customers, for our family, our good health, roof over our food. There's so many things to be grateful for, but I want to keep this down to for you, what are you grateful for? Let me know in the comments that you did to help you get through this time, whether if it's a business thing or a personal thing. I'm grateful that I started live streaming before we got into this mess. So I don't have to just start now. And everybody's all of a sudden trying to find their way. And how do you do this? I'm not doing that. I'm just doing what I've always done. The 4:30 show, click the go live button, and I'm done. Okay. So just want to say something. Okay. I just had to shout out something. So who is out there? Lori, thank you so much. Here are some better t-shirts. Check out. I'm gonna have to check out the t-shirts. Lori posted a link in the comments. LOL, thanks. Unfortunately, I won't be riding it for a while once we're back in the world, since I was a part of a COVID company layoff. Oh boy, I'm sorry to hear that. So Jen, you my contacts on LinkedIn and Facebook are now your contacts on LinkedIn and Facebook. If there's anyone out there that I can help connect you to, please let me know. If there's a particular something or other that you're looking for, please let me know. We've all been through this before, but that's what really stinks about this. It's just horrible. It's like, when I spoke to a friend of mine, Evan, and they had layoffs, and I spoke to another friend of mine who had left. It's really awful what's happening. I hope you can keep your spirits up. Let me just take a peek at the LinkedIn and who's out there. It's interesting. Usually I get more views and comments from LinkedIn than I do in Facebook. Oh, never mind. I have a few. So there, I see them. So let's just take a quick look who's out there in LinkedIn land. Howie Balsam, how are you, Howie, at U.S. Legal Fund? Great to see you. Hey, Judy's here. Judy, come on in. You guys want to meet my wife? Come on in. Yeah, it's okay. Come on. Watch out for the lights. I have like lights and wires all over the place. Yeah. Hey, everyone, say hi to my wife, Judy. Here's the camera. So we look at the camera. Terrible. You look beautiful. Uh-huh. You look terrific. So this is okay. You figured out why I am so happy to be working from home. Okay. You want to watch Netflix later? We watch Netflix later. Yeah, Netflix. Okay.
Hi. Hello.
Okay. Yeah, Netflix. Oh yeah. Okay. This has really gone off the rails. So Howard, great to see you. And oh yeah, inappropriate. But you laughed, didn't you? And David Gonzalez. Hey man, thank you for being out here. Do you recommend buying any stock in companies like Disney, or where you know their price is almost half of what it usually is? Jennifer and Amy say hi Judy, and Lori is on also. Okay, all right. So I personally I like stocks. I use exchange traded funds and individual stocks for the growth component of my client accounts, and certainly with individual bonds and bond ETFs as well. And then there's cash, money market, cash equivalents, that sort of thing. The basic building blocks of a portfolio. I like to keep it plain vanilla. I don't like leverage. So 2 Mondays ago, I said I've turned into a buyer. Could you just lower that a little bit, please? I turned into a buyer like 2 weeks ago, and I stopped buying Monday of last week. Having said that, a lot of stocks are still way down. I don't think you missed an opportunity at all. Whether if you're looking at Disney or not, I think you're smart to say, I'm looking at top-notch quality. And that's what you want to look at. You want to look at companies that you could say, well, if they go down, so what? It's, they'll come back, because you could be wrong short term. If you buy something just because it's down and you expect it to jump back up on a good day, that is a very tough thing to do. You could be disappointed. Okay. Obviously you could be very happy as well. But what I say is, if you're going to buy something, you're going to invest in a stock or any, investment, make sure it has a proper fit with the rest of your portfolio. Take a portfolio approach as opposed to a stock by stock, an individual stock by stock approach. I think that would be better. This way, it doesn't matter if the investment goes up or down, because it was a portfolio decision that fits in with the rest of your portfolio, adds diversification, and brings some kind of value to your portfolio aside from just if it goes up or down. If an investment just goes up, well, then it's a good investment. If it goes down, it's a bad investment. But what if you buy Disney and it drops 20%? But does that make it a bad investment? I don't think so. Because you're talking 3, 4, 5 years out, it could be way, way up. And that's how I look at the investing. Now, a client once said to me, he said, Mitch, I don't really care about the ingredients that go into the sausage. I don't care how it's made. I just care if the sausage tastes good. I just want to buy. I just want to see the sausage. That's all. I don't need to see the ingredients and the meat grinder and everything else. And some people just like to actually see the ingredients. They want to see the individual stocks, the building blocks. And I do both, but it really has to come down to what's the risk tolerance and preferences of the client. I hope that answers your question. I don't want to get just into the individual stocks, individual stock names. But certainly, when you say Disney, you are a quality buyer. Okay, that's a high quality company. So that's it. If you have something that you're grateful for that you did before this happened, I'd love to know, because I'm looking for gratitude. Because sometimes in this crazy world we live in, it's all we have to hang our hat on for the time being. We will come out of this, folks. We will get back on our feet. And if you suffered a job loss, I would love to help you out. I have connections. I'm a pretty good networker. And let's see what we could put together to help you, get back on your feet and get back into the job market. It's losing a job through this crazy environment, this illness is no fault of yours. There's no shame in it. And there's no shame and asking for help. So please do. Okay, having said that, I'm going to get going. Thank you, everyone, for watching. It means a lot to me. It really does. And I'll be here tomorrow at 4:30, our usual time. Take care.